Okay, good evening, everyone, and welcome to this session on IBC on corporate and income tax laws. Corporate and economic laws. And this session again is in continuation of my previous session, where we had started with the topic of IBC and had covered various basic sections, and we concluded our previous lecture on section 12, and I had discussed something about section 15, where we had understood about public announcement. So in my last lecture, I had mentioned about that the application will be admitted and NCLT will give an order. So practically what happens, hearing is done on section 7 and 9 and 10. Remember these three sections, section 7, 9, 10, section 7 by FC, 9 by OC, 10 by the corporate editor itself. And after hearing, the law says it has to be done within 14 days, but as we practically it does not happen in 14 days. It takes time, which may extend to 2 years also, 1 to 2 years also. You never know. So anyway, not going to those details. So once the NCLT does the hearing, finally, if the application is accepted, the NCLT will admit, remember the word, admit the company into insolvency. Admit the company into insolvency. And thereafter, the CIRP process will start. CIRP process will start. And the date of NCLT order will be regarded as the insolvency commencement date. Insolvency commencement date. Date of NCLT order. Remember, these are some basic concepts. Date of NCLT order. One is the date on which application is filed, that is initiation. Second is the date on which NCLT admits the company into CIRP, that is the date of commencement of insolvency. Remember 180 days. 180 days will start the date when the NCLT gives the order. And once NCLT gives the order, three things are mentioned in this order: moratorium, public announcement, and appointment of IRP. Moratorium, public announcement, and appointment of IRP. So three things are mentioned in the order. Public announcement has to be done as per section 15, that is within 3 days. We have seen that. Moratorium will start from the date of NCLT order. Very important. Moratorium, concept of moratorium is very important. We'll discuss that. So let us see, what does this mean? Moratorium is a particular time period during which the company is under CIRP, the process will continue. And during this time period, no action can be taken against the company or its asset, and it is to be ensured that the company is running as a going concern. So if any action which is taken which violates the basic condition of running the company as a going concern, that action is not allowed under the provision of this Act. Now, for example, attachment of the assets by the income tax department or GST department, not allowed. For any default committed previous to the commencement of insolvency process, if the attachment is done after the insolvency is started, that attachment is not allowed. That is one example. There are multiple examples of the same. So what is the impact of the moratorium? So anybody who just logged in, just mention good evening to those who have logged in, and they can send a message so that I can understand who have logged in. Okay, so the impact of moratorium, friends, the impact is wide and it gives the benefit to the company. Remember, moratorium is basically a benefit to the company. So the first moratorium, the first thing which will apply, that institution of suits or continuation of any pending suits or proceedings against the corporate debtor. That means if any suit is pending against that corporate debtor, the suit will come to a standstill. Any judgment, decree, or order in the court of law, tribunal, arbitration will come to a standstill. Though hearing will continue, but then no action can be taken till the CRP gets completed. They may continue with the hearing, but no action can be taken. That is the first biggest benefit of moratorium. The second is that you cannot transfer any company's assets or any legal right or beneficial interest. For example, that means if you are receiving any rent, that is a beneficial interest. So you are owning a property, along with that you are receiving rent, that's a beneficial interest. You cannot dispose, transfer, or you cannot stop receiving that interest unless it is something being done illegal. So that in that case you can do it. Any action to foreclose, recover, or enforce any security interest created by the corporate debtor in respect of its property, including any action under SARFAESI. So any step which has been taken and taken to enforce any security interest, that security interest which has been given by the corporate debtor. Remember, we have studied security interest, simple mortgage of the company's asset to the bank. And if the bank is taking any action under SARFAESI to recover or sell those assets and recover their amount, that is not allowed. The recovery of any property by an owner or laissez-faire such property is occupied by or in the possession of the corporate debtor. So that means, let's say company is running its offices and the office is taken on rent. In that case, in that scenario, the property owner cannot ask the company to vacate that office because the company is running there and the company is a going concern. Therefore, they cannot ask. Obviously, he will be entitled for the rent part. You cannot deny the rent, but then you cannot ask the company to leave. Further explanation to section 14, it says that any license which the company has got, permit, registration, quota, or any similar grant given by the central government, state government, or any other local authority shall not be suspended on the grounds of insolvency. On the grounds of insolvency, your license will not be suspended. Subject to the condition. This is very important. This is important. So in exam, the question will be asked, insolvency commencement date 21st December. On 21st February, you being the RP receive a notice from a department suspending any registration which has been granted by the government on the reason that you have not paid the monthly amount of January which is due from you. So is it valid under the IBC code? The answer is yes. That notice has been given, suspension and notice has been given because of non-payment of fees for the period when the company has been admitted, and that period falls after the admission date, not before the admission date. So if there is a default once this insolvency starts, and because of that default, there is a suspension of license, that is allowed. But for a default prior to commencement of CRP, then there cannot be any suspension of license. Then it has been mentioned under the law that supply of essential services will continue That means the electricity department cannot disconnect the electrical supply. Water department cannot disconnect the water supply, or any other essential services which are required to maintain the company as a going concern. If that is not being done during this particular period, then it is violation of section 14, that the moratorium period. Now, there are certain exemptions from these prohibitions. Any transaction, agreement, or other arrangement as may be notified by the central government in consultation with any financial regulator or any other authority, let's say with RBI, then they may continue. Then that prohibition may continue. That means it will not fall under the purview of moratorium. Now, this is important, friends. This is very important, where moratorium is granted to the company, not to the guarantors. So, a surety in the contract of a guarantee to the corporate debtor shall be exempted from application of section 14. So, suit can be instituted against a surety during a moratorium. So that means moratorium will apply to the CD, not to the guarantor. This is important. Please do remember. So I hope section 14 is clear. And the duration of moratorium, the moratorium will apply till the completion of the whole process of CRP. And when will be the whole process be completed? Whole process will be completed when the adjudicating authority approves a plan or passes an order for liquidation. Approves a plan or passes an order for liquidation. Remember, the end result of CRP would be either the plan is approved or the company goes into the next stage, that is liquidation. That is the end result of this whole process. So here is few questions. Here are few questions. Can we have? So answer is, who shall declare a moratorium? Remember, not the insolvency professional. He cannot declare. It is only the NCLT or adjudicating authority. Which of the following activities shall not be prohibited or terminated during the moratorium period? Transferring, encumbering, alienating, disposing of any assets by corporate debtor. Recovery of any property by owner or lessor where such property is occupied by or in the possession of corporate debtor. Any action to foreclose, recover, or enforce any security interest. The supply of essential goods and services. So the question is, which of the following shall not be? So which shall be prohibited? This shall be prohibited. This shall be prohibited. This shall be prohibited. But this is not prohibited. It has to continue. You cannot stop the services. So it is not prohibited. So the correct answer is D. No, Bhomik, until unless the order is made, moratorium will continue. Moratorium will only stop when NCLT gives order. Even if it gives the order after 330 days or 500 days, 1000 days, moratorium will continue. Because moratorium was implemented because of NCLT order, so it is only the NCLT which will close this moratorium. Is this clear? Okay. Three things which is mentioned in the NCLT order: public announcement, moratorium, and appointment of IRP. Now remember, appointment of IRP, let us clear this concept. First question, who will appoint IRP? The answer is adjudicating authority. Who will appoint the IRP? Adjudicating authority. Second, whose name will be proposed as IRP? Whose name will be proposed as IRP? Answer is, if it is a Section 7 application, if it is a Section 7 application, then the name proposed by the applicant, name proposed by the applicant will be appointed as the IRP. If it is Section 9 application, if it is Section 9 application, then if any name has been proposed by the applicant, then that person will be appointed as IRP. And if no name is proposed by the applicant under Section 9, remember, Section 9 gives not a mandatory condition of giving a name. The choice is given whether you want to propose or do not want to propose. But in Section 7, a name has to be proposed. So if in Section 9, if name is proposed, then that person. But if no name is proposed, then as per law, the A will make a reference to the board for the recommendation of an IP, and the board, that board means IBBI, will recommend a name within 10 days of the receipt of the reference from AA. That is as per law. That means if no name has been proposed in Section 9, then the adjudicating authority will make a reference to the board, and board will make it the reply in 10 days. Practically, how is it done? I'll explain. Practically, the board, that is IBBI, maintains a panel of insolvency professionals, and it sends those panel to all the NCLT benches across India, and the adjudicating authority will pick a name from that panel which is being sent by IBBI. So that means there is no such requirement of making a reference to board and then thereafter board making a proposal of the name. That is not done practically. So Section 9 and Section 7, I hope it is clear. Section 10, again, it is a mandatory requirement that a name of the IRP is proposed in the application. So whoever name is proposed, that person will be appointed as the IRP. I hope the process of appointment of IRP is clear. Any doubts? Now, who is to be appointed the IRP of that particular company? So very simple. So the condition is, remember, the condition, who will be appointed as IRP? If he and all partners and directors of the IP of which he is a partner are independent of the corporate debtor. Now to explain you the whole structure again, remember yesterday we had done the concept day before yesterday, we have a IPA. And under IPA, we have IPs. And we have IBBI. So IPs get enrolled with IPA, and IPAs are the people who get enrolled with IBBI. So to execute the whole process of insolvency, IPs are appointed by the name IRP, RP. We'll understand the difference between IRP and ARP later on. So IRP or IRP both means IP, insolvency professional. IRP is interim resolution professional, RP is resolution professional. IRP is interim resolution professional, RP is resolution professional. Both are under one category, that is IP. And IP enroll themselves as member of IPA. Now, later on, after the law was introduced, IBBI introduced the concept of IPE, Insolvency Professional Entities. Insolvency Professional Entities, which is nothing but a firm comprising of IPs as member of IP. Firm comprising of members, comprising the IPs as the members of the IP. That means you can enroll yourself as an IP, and further you can create a firm which can again enroll itself with the IPA. So insolvency professional entity is a firm of insolvency professional. Before 2 months, the NCLT or the law had specially mentioned that only an individual can be appointed as IRP or RP. But after the recent amendment, the IPE, that is a firm, can also be appointed as a IRP. That has been a major change in the current year, so it does not apply to your exam. I don't know whether it will be included or not. I'm doubtful, but okay. But for May attempt, yes. For May attempt, it may come in because it is an amendment prior to 6 months. So remember, if the question is asked who all can be appointed as IRP, as per the latest amended law, an individual who is an IP can be appointed as IRP, or an IPE also, which is nothing but a firm of IPs, and they registered themselves with IBBI. So there are separate guidelines for that. Once they register themselves with IBBI, they can also be appointed as IRP or RP. So if they are to be appointed as an IRP of a company, then the basic condition is that they should be independent of the corporate debtor. So either individually, if he's appointed, he should be independent. And if the IP is appointed, all the partners and directors of the IP should be independent. Now, when they are considered as independent, that has been mentioned, when he is eligible to be appointed as an independent director on the board of the corporate debtor. So that means if you are eligible as an independent director, then you are eligible to be appointed as an IP. Second, not a related party of the corporate debtor. Very natural, if you are appointed as an independent director, then we'll assume that there is no relationship. And third and fourth condition important, is not an employee or proprietor or partner of firm of auditors or secretarial auditors in practice or cost auditors of the corporate debtor in the last 3 years. That means you have not audited the company's balance sheet. Further, if you should not be an employer, proprietor, or partner of a legal or consulting firm that has done transaction with the corporate debtor amounting to 5% or more of the gross turnover of such firm in the last 3 financial years. I hope it is clear, friends. So third and fourth point are important. Who is not allowed to be appointed as IRP? The next point comes in, friends. If the word IRP is there and the word is interim, that means he's not the final person. That means he's appointed for some time period. He's appointed for some time period. So that what is that time period? So the term of IRP will continue from the date of order till a resolution professional is appointed by COC in its first meeting. In its first meeting under section 22. So the time limit as per law, I'll come to the practical aspect. Time limit as per law, from the commencement of NCLT order till the first meeting of the COC, Committee of Creditors meeting under section 32, which as per the timeline should happen in 30 days. Which as per the timeline should happen in 30 days. So the deemed number of days for which the IRP will be appointed is 30 days. Deemed. It is not directly, but it is deemed. Now, what is going to happen in the first COC meeting? That we will see. But in the first COC meeting, let's say the NCLT appoints Ranveer as the IRP. So after 30 days, the COC may decide to continue Ranveer as the resolution professional. So today is the IRP. After 30 days, if the COC appoints him, then he will be termed as RP. Or the COC may appoint a new person Devgan as the RP. So after 30 days, the COC will decide whether they want to continue with the same IRP as the RP or they want to appoint a new person as the RP. I hope it is clear. Now, let's say in the first COC meeting, the COC is not able to decide on this matter to whom they want to appoint as RP. So they say that I need another 10 to 15 days. So the next timeline which comes is 40th day. So that means they have not been able to decide on the new name of the RP. Ranveer will be continuing the office till the 40th day as IRP. And after that 40th day, Ranveer will continue to be known as deemed RP. Because the COC has still not decided whom to appoint as the RP. So he will continue to remain as a deemed RP till the COC decides to whom they want to appoint as the RP. This is as per regulation 17. So for first 30 days, he is IRP. And if the COC decides to remove him, good. If the COC decides to continue with him, very good. But if the COC is not able to decide, thereafter from the 14th day, he will be termed as a deemed RP. Is this clear? Now remember, whenever COC wants to change the IRP, or later on if they want to change the RP also, they would need a voting in this matter, And in that voting, 66% should fall in favor of that person. So without getting that 66% vote in the favor of that person cannot be appointed as an RP, sorry. That person cannot be appointed as the RP. So to change a person from Ranveer to Devgan, see, from Ranveer to Ranveer as an RP, no voting would be required because there is no change. But from Ranveer to Devgan, if they want to change, they would require 66% vote. I hope it is clear. Now, this is the position of IRP. Now, once the CRP starts, then what is going to happen? Monitorium will apply. Public announcement will be done. Public announcement will be done by the IRP. Public announcement will be done by the IRP. And the purpose of making the public announcement, is to call for submission of claims. The purpose of making the public announcement is to call for submission of claims. That means inviting claim from all the creditors. And simultaneously, he has to take the management of affairs of the corporate debtor. He has to take the management of affairs of the corporate debtor. Right. So how will you do that? We'll understand section 17 and 18. And thereafter, he will consolidate all the claims. He will consolidate all the claims and he will constitute a COC, Committee of Creditors, and then call for the first meeting of the COC. That is his major job. So major job is 4. Public announcement and call for the claims. Take over the management affairs of this corporate debtor. Third, consolidate all the claims and based on the claims constitute the committee of creditors and call the first meeting of the committee of creditors. This is the job of IRP. Any questions so far? Mr. Bhaumik, there is no such provision of change of IRP within 30 days. That means IRP will work till 30 days. Because 66% vote is required from whom? It is from the COC. And the COC will only be constituted and called for the meeting within 30 days. I hope it is clear. Bhaumik, the IRP will take over the management of the affairs of the corporate debtor, but then the decision-making power is mostly with the COC. I hope it is clear. So let us understand the process of taking over the management of affairs of the corporate debtor. What does a IRP has to do practically? As per law, what he has to do and how will he do that? And then how will he constitute the committee of creditors? Two important sections, section 17, 18, and 21. 17, 18, and 21. So as an IRP, I will have different powers. The first power which comes in onto me is the management of the affairs of the CD shall rest on the IRP. That means he is now the CEO of the company, the managing director of the company, who is going to run the operations of the company. And the powers of the board of director shall stand suspended. Remember, technical point, the powers get suspended, not the board. The board is still there. The board wants to resign, that's their choice. The board is still there, the powers get suspended. That means as per company law, they cannot exercise any power. And all will be exercised by the IRP. And because of this, every person in the CD, be it the officer and the manager, shall report to the IRP and provide access to him all documents and records of the CD as may be required by the interim resolution professional. So all reporting to be done to the IRP, and instructions are given to the financial institution maintaining the accounts of the corporate debtor that they will not act or they shall act only on the instructions of the IRP in relation to the operation of that account. And if required, if they required by the IRP, they will furnish all information available with them to the IRP. So 4 things are going to happen: management of affairs, powers, reporting, and no transactions in the bank account except with the permission of the IRP. Good. That is the 4 primary job. Then because you have to do those 4 primary job, there are ancillary powers which are given to support those 4 primary jobs. The first is they can act and execute in the name and behalf of the corporate debtor all deeds, receipt, and other documents, if any. That means they have the power to execute all documents on behalf of the corporate debtor. All kind of deed, receipt, and other document. Take such action in the manner and subject to such restriction as may be specified by the board. So if there is a restriction by the board, they can do that. They have the authority to access to the electronic records of the corporate debtor from IU. Remember, information utility having financial information of the CD. So that's an additional thing which is given. And they have the authority to access the books of accounts, record, and other relevant documents of the CD available with government authorities, statutory auditors, accountants, and such other persons. So that means if the government department or the auditor, let's say you are auditor of the company and you have certain kind of information and documents, then they can write a letter to you. The IRP can write a letter to you submitting all the relevant information. And then they will be responsible for complying of the laws for the timing in force. That means whatever the CD has to comply with the law, then you will ensure that the laws is complied with. So that was the power. Now coming on to the duties. So more or less a theoretical question could be asked on the powers and duties. There is no such technical understanding which is required, because it's more of a process which has to be done and followed. Okay. Duties of IRP. collect all information related to assets, finances, and operation of the corporate director, because finally he has to run the operation. So he should be aware of all the assets, whatever of the assets are there of the company with respect to assets. This is the section, custody of the asset. Custody of the asset. So with respect to asset, what he has to do? Take control and custody of any asset over which the CD has ownership rights. That means he has to take a possession of the asset. That means he'll write a letter to the management saying that please give me the list of assets. Where are they lying as per the balance sheet? Or if any information is with the IU or the depository of securities or any other registry, let's say CERSAI, where this information is stored, that records the ownership of the assets, including all those assets. So you will make the suspended management will take a list of the assets, and then the IRP will make a counting or take a symbolic position of all the assets. That yes, now assets are under me, symbolic position, and they are running as it is. Where is it? As it is, where is it basis? So it does not mean that he has to visit each and every place. Maybe difficult, but then on a sample basis, he can get things verified. And purely on paper, it is being now lying with the ownership of the IRP. Obviously, he can deploy the new security cards at the places where he feels that it is important to safeguard those assets. So a new security guard can be appointed. And if he wants to make a visit, he can make a visit. He wants to get things audited, he can get things audited. So he can do anything to take over the control and the custody of any assets. So which kind of assets? Assets over which the CD has ownership rights, which may be located in a foreign country. Assets that may not be in the possession of the corporate debtor, though the ownership lies with the CD, but then they are not in the ownership of the corporate debtor. Let's say they are given on rent. Tangible assets, whether movable or immovable. Intangible assets, including intellectual property. Securities, including shares held in a subsidiary of the corporate debtor, financial instrument, insurance policies, so all kind of investments done by the company. And very important, please note for the exam point, assets will not include the assets which are owned by third party, but then they are in the possession of the CD, held under trust or any contractual agreement. Assets of any Indian or foreign subsidiary. So we cannot take over the assets of the subsidiary. Or any other asset notified by the CG in consultation with the financial sector regulator, though nothing has been notified yet. So the first step, what they have to review is to information about the assets. So they have done. Then about the operations, what they will do, they will ask the management to submit business operation for previous 2 years, financial and operational payments for previous 2 years, list of assets and liabilities as on the initiation date, and any other matter as may be specified. So they will provide the suspended management as a duty or obligation to provide this kind of information. So one part is to take over the business and the assets. That is the first part. That is the job of IRP. Take over the business and the assets of the company. And the second part is to obviously ensure the company runs. He can execute deeds. He has to comply with the laws. He can appoint people for his support. He can do that. So that is the execution. And the third part is more on the liability part. That is to collect the claims. That is to collect the claims. So receive and collate all the claims submitted by creditors. Based on the claims, constitute the COC. And if required, file information collected with the information utility. So if he wants, he can file an information with the information utility also. Any doubts still here for the powers of IRP? So his job is over? The answer is no. He has to call for the meeting of the first COC. First meeting of the COC. Let us understand this concept, whatever we have studied. So Mr. Z was continuing as IRP. In XY Limited, the committee of creditors by majority vote of 75% proposed to appoint Mr. Final as RP of XY. The said proposal was confirmed by IBBI after the expiry of 10 days. State Mr. Final can be appointed as RP immediately. The answer is no. You cannot appoint a person immediately. Remember, we have studied that the COC can continue with the same IRP, can change by getting a vote of 66%. But is that all? That I have got a vote and voting is done, and voting is done in favor of Mr. Devgan. So Mr. Devgan is to be appointed as the RP from next day. The answer is no, friends. As I said, practically what happens, and even the law says that. The law, remember, in general, you should always remember, all appointment of IRP, RP is done by adjudicating authority. Without their order, we cannot appoint anyone. Be it the new RP which has been proposed by the COC, whoever is it. That means once the COC approves the appointment of Mr. Devgan as the new RP, they have to file an application at NCLT. They have to file an application at NCLT. And the adjudicating authority will approve his appointment. So practically, the first COC is held in 30 days, and in that particular meeting or subsequent to meeting on the voting part, when the voting is done, the new RP is appointed, an application is filed, and the NCLT hears that application. So maybe it takes another 15, 20, 25, 30 days more. In some of the cases I've seen, it has taken 2 months. So what is going to happen during those 2 months? Remember, as I said, it is the IRP who will continue to do the job. And after 40th day, he will be deemed as a RP. And then he will keep on doing the functions of RP. Mr. Bhomik, the holding company is into insolvency. Subsidiary may be running. Why do you want to drag the subsidiary into insolvency? Is it clear? Okay. So I hope the process of appointment of RP is clear. Perfect Polyester is undergoing CIRP. COC is constituted. In the meanwhile, the corporate creditor, the company itself, makes a settlement with the applicant, the financial creditor, and desires to get the application withdrawn and seeks your advice. So can the process of CIRP withdrawn? That is the basic question which you need to understand. Can it be withdrawn? The answer is yes. The process of CIRP can be withdrawn. The process of CIRP can be withdrawn. How it can be withdrawn? Remember, who will give the order? Because initiation was given by adjudicating authority, the withdrawal will also be given by adjudicating authority. How it will be done? How will the A come to know about that the process, the settlement has been done, the financial creditor has received its amount? So what is going to happen practically, friends? The proposal will come to the applicant who has originally made the application that I want to settle. Fine. Settlement is done. Thereafter, the withdrawal application is put forward for voting in COC. And the COC should approve that withdrawal by 90% vote. There are few voting requirements which have been made compulsorily in IBC. So primarily it is 66%, 90% and 51%. Everywhere it is 66. This scenario, withdrawal, settlement, 90, and rest in every case it is 51. So with the 90% approval of the COC, the applicant will submit an application to NCLT that this is the 90% voting in favor of this. Now I want to withdraw my original case. So thereafter, once the application is made, the CRP process gets withdrawn. I hope it is clear, friends. So the job of IRP is clear, that the IRP will constitute the COC and call for the first meeting of the COC. So we'll now understand the constitution of COC. So who is a RP? Independent person. Obviously, we know that. So he is an insolvency professional appointed to conduct CIRP process. Or any person qualified to be appointed as an RP and who has submitted an application report to undertake CIRP process. So obviously, who is a RP? So D is the more appropriate person. What is the eligibility of the RP? So the RP and all partners of the directors of the IP, of which is a partner or director, should be independent of the corporate debtor. Should be independent of the corporate debtor. What is the term of IRP? Remember, there is no term which has been defined. So his term is till the time of RP is appointed. Remember, don't commit this mistake of 30 days. So it may happen in 30 days, the new RP is not appointed. That means the IRP will only work the 30 days and thereafter his job is over. No. His job continues till the time the RP is appointed, new RP is appointed. Which of the following activities cannot be undertaken by IRP? Cannot be undertaken by IRP. So obviously, he can appoint legal or other professions to aid him. To issue instructions to the personnel of corporate debtor to keep the company as a going concern. To enter into contracts on behalf of the CD? Yes. To undertake liquidation proceedings? No, because the current status is only CRP, so you cannot take liquidation proceedings. The COC of XYZ Limited proposes to appoint Mr. Ajit, an IP and insolvency resolution professional in the matter of XYZ Limited. Mr. Jeet was a promoter of ABC, which is a holding company of XYZ Limited. So being an holding company, being an holding company, being the director, promoter of holding company, he, by virtue of this, he becomes a related party of XYZ Limited. Because he is related party, he cannot be appointed as the RP. Now, some typical questions, which requires deep understanding. So those typical questions are, in view of the deep recession prevailing, Mrs. Infra Limited, which was facing the brunt of financial crisis, could not pay salaries to workmen. Fine. The workmen who are members of a recognized trade union made a complaint in this regard. Thereafter, the trade union approached and urged the management in person through representation in writing to settle the areas of wages and salaries. The CD neither disputed nor took any action. To settle the amount. Under the circumstances, the federation, the trade union, filed an application before A. In the light of these provisions, validity of application and what will be the initiation date, validity of the application. Now remember, whenever a question comes of application being made, you have to refer to three. Three sections, section 7, 9 and 10. You have to refer to three sections, 7, 9 and 10. Remember these three sections. Now, these three sections, if you see 7, it is by financial creditor, 9 by operational creditor, 10 by company itself. Under this, so under this, because it is a trade union, it cannot be a financial creditor. Therefore, we need to look at section 9. Section 9 is all by operational creditor. Now, first question, whether the Infra Labor Federation is an operational creditor. If it is to be filed by an operational creditor, whether that is the first thing, whether they are operational creditor or not. Right? Second, because there is no amount mentioned, so obviously the question is not about amount. So that is immaterial. The question does not talk about any amount. Third is whether they have proposed in the application all the requirements. So question does not talk about it. So the question is very simple in the terms of what are they asking, whether the application which is filed by the Infra Labor Federation, whether they have right under the code to file an application. So your answer would be obviously in reference to all these sections, whether they fall under the category of operational creditor or not. So as per the definition, section 521, all workmen and employees fall under the category of operational creditor. So if any due is with respect to employment, then that due is regarded as operational debt. Second, who can file an application? So an application can be filed by a person as an operational creditor. An operational creditor means a person to whom an operational debt is owed. Operational debt has been defined, so it falls under the definition of operational debt. Operational creditor means a person, and the person is defined under 323, includes any other entity established under any statute. And a trade union registered with Trade Union Act would be an entity established under the statute. Right? I hope it is clear. Now coming to the constitution of the COC. Constitution of the COC. So here, the first line, which is the most important line, the first line, which is the most important line. The COC shall be formed with financial creditors only. COC shall be formed with financial creditors only. That means you should be very clear in the question about constitution of the COC that only the financial creditors will be forming part of this particular world. And if financial creditors are related, they will not be part of the committee. If financial creditors are related, they will not be part of the committee. That means related financial creditors are not part of the committee. I hope it is clear. Neither they will have any right of representation, participation, or voting in a meeting of the committee of creditors. Neither they have any right of representation, participation, or voting in the meeting of the committee of creditors. But with an exception that if he is a financial creditor, which is regulated by financial sector regulator, let's say a bank, because regulated by RBI, and they have become related only because of the reason they have converted their debt into equity. Because of certain settlement with the borrower, the corporate debtor, previously they have converted their debt into equity. And because of this conversion, they have become a related party. Then they may be allowed to be party member of this COC because that is an exception given under section 21. I hope it is clear. So related party has been defined under the Act. I'm not going to that definition of related party because it is a whole list, a big list. You should learn it. Is it same as per the related party of the company law? There are some same angles and there are few different angles also. So one has to be very careful about the relative definition, which is again has been always a question of complication because in each law there have been different definitions of relative. And quite surprisingly, let's not, if there are so many confusion, why not come with a particular law which talks about the relative act, and they define the relative section there only, so that things are clear for everyone. Anyway, that is one of the suggestions. Now, if you refer to this particular law, section 21, which talks about constitution of COC, financial creditors, can you tell me, is it compulsory that every company will have financial creditors? It may not. If, let's say, company is not taken any loan, they may not have financial creditors. They may not have financial creditors, right? So in that scenario, what is going to happen? If the company's balance sheet do not show any financial creditor? Exam related point. What if there are no financial creditors of the company? Then let us see this graph and make it more clear. When there are only first is only of FC. What if there are no FC or all FCs are related? Try to understand. You need to imagine a situation which will give you a scenario where how can a company will have no financial creditors to be part of the COC? So obviously one is when there are no financial creditors, but even if they are related, so they cannot be part of the COC. Then we refer section 16, regulation 16 of CIRP regulations. So regulation 16 says that the committee will be formed with 18 largest operational creditor by value. So another question could be asked in the exam that when can operational creditor be part of the COC? So under that scenario, we have to mention that where the FCs are not present or all FCs are related, then the OC will be part of the COC, and OC, 18 OC with largest operational creditor by value, they will be part of the COC, plus one representative elected by all workmen, one representative elected by all employees. Right. So the voting right in the COC will be in proportion of the debt due to such creditor or debt represented by such representative, as the case may be, to the total debt. So each person will be allotted a voting percentage that will be in relation to the debt owed by the creditor to the debt owed by the company to the creditor. And for that purpose, the total debt is defined as the amount of debt due to the creditors, amount of aggregate debt due to workmen, plus the amount of aggregate debt due to employees. Now, a few other questions. which is again part of the section, but which are relevant to you. What will happen under a scenario of consortium finance? Now, we all know that consortium finance is nothing but when a group of banks come together and finance a company. So obviously, here it does not make a difference. So if there is a consortium agreement between all the banks, then each financial creditor will be part of the committee. It is not that only one bank will be allowed to participate in the COC. Each bank will be part of the committee to the extent of their voting share. So no complication. Simple. If I've given a loan, even I've given a loan in consortium, but then I individually will be part of the committee to the extent of my loan. Now, there could be a scenario where a person is both a financial creditor and an operational creditor. While the law was created, probably they would have envisaged all these kind of scenarios, but then they did not envisage the scenarios which are, pending at NCLT, where a lot of issues are still coming on a day-to-day basis. Every day there's a new one issue comes up, and the NCLT takes time on the decision of those matters, and because of that, the process gets delayed and goes beyond 330 days. Because each case is a peculiar case with a lot of issues, customized problems, and somebody has to look into those problems. So therefore, cases have been built up on at the bench, the adjudicating authority, and therefore the process gets delayed. So the scenario where the person is both, then to the extent of financial debt, he will be included in the committee of creditors. But to the extent of operational creditor, he will not be included in the committee. He will be treated as an operational creditor. Now remember, can assignment happen? What is assignment? I will transfer my receivable to someone else. I forfeit my right. I say I don't want to receive this amount from this company. Somebody else will receive. So when this right is transferred, that means the assignment is done. Whether that person will have the same benefits to the original debtor, the answer is yes. So when the loan or the operational debt is assigned to some other person, he can file a claim and he can become part of the company. Now, with respect to the class of creditors. With respect to the class of creditors. Now, who are class of creditors? Remember allottees, home buyers we had discussed yesterday. So let's say 100 home buyers coming together, so they become a class of creditors. Fixed deposit holders who have given money to the company as a deposit, or debenture holders who have subscribed to the debenture issue of the company. So when there are large in numbers, so will you allow them to be part of the COC, each member, because they have given loans? So they are all financial creditors. So each person will come. So if there are 100 home buyers, 1,000 fixed deposit holders, 1,000 debenture holders, so the IRP calls for a meeting, and then he has to organize that meeting in a big hall and address to the queries. Very difficult. Very difficult, right? So the provision of authorized representative has come into picture. Provision of authorized representative has come into picture. And it says that when authorized representative can be appointed, where the debt is in the form of securities or deposits and the term of financial debt provide for appointment of a trustee or agent to act as authorized representative, or it is owed to a class of creditors, or is represented by a guardian, executor, or administrator. So that means, let's say in the case of debenture holders deposit, they provide for appointment of a trustee or agent to act as authorized representative. In case of home buyers, they belong to a class of creditors, or it is represented by a guardian, executor, or administrator of any estate. Then the authorized representative will be appointed. And who will appoint an authorized representative? The answer is adjudicating authority. Adjudicating authority will appoint the authorized representative. How will adjudicating authority come to know that this particular company, the CD, has got a class of creditors or deposit holders? So in that scenario, remember, the responsibility is casted on the IRP, that he will file an application to AA along with all the list of FCs containing the name of an IP other than the IRP to act their AR. That means the IRP will make an application for the appointment of the authorized representative, who can be only an insolvency professional. Only an IP can be the insolvency professional, can be appointed as AR, and he will make an application for the same. So once the application is done, and based on the application will be heard, and the adjudicating authority will appoint the authorized representative. Thereafter, once is appointed, the authorized representative will attend the meetings of the COC and vote on behalf of the financial creditor. He will vote on behalf. That means he does not have any voting power. Voting power will lie with the financial creditor. So whatever the instructions will be given by the financial creditor to the authorized representative, he will vote accordingly. So what are the rights of authorized representative? What are the rights of authorized representative? So rights are right to vote, then duty to circulate the agenda and minutes. Whatever he receives from the RP as the agenda and minutes, he has to circulate those minutes. Duty not to act against the interest of the financial creditor which is representing. Obviously, he will act only with the prior instructions of the financial creditor. If the financial creditor does not give a prior instruction, the authorized representative shall abstain from voting on behalf of such creditor. So if any voting is conducted and there's no prior instructions, then obviously he will not vote. If he is representing multiple financial creditors, he will cast his vote in respect of each financial creditor. Fine. Now, his duty is to act as per majority instruction because he is representing a class of creditors. So within that class of creditors, somebody may agree, somebody may not agree. So what will the AR do now? So it is mentioned that within the class of creditors, he will act, he will cast his vote on behalf of the financial creditors, where the decision has been taken by the financial creditors by a vote of more than 50% of the voting shares. So out of 40, let's say, if 25 have given in favor in terms of, let's say, the voting percentage in favor of a decision, then accordingly we'll favor that particular voting agenda in the main meeting. In spite of few people not agreeing to that particular voting agenda. It may happen. Not relevant. Again, not relevant. Obviously, the fees, because he's attending a meeting on behalf of the financial creditor, so he will be given certain remuneration. And that will be part of the CRP cost. We'll understand what is CRP cost. So the constitution of COC is clear. Now let us see how do they meet and when do they meet. How do they meet and when do they meet? So the members of the committee may meet in person or by either electronic means. All meetings shall be conducted by the RP. Section 24 says that. The first meeting will be conducted by the IRP. Thereafter, every meeting will be conducted by the RP. Very important, the RP will give notice of meeting to all the members of committee creators, including the authorized representative, members of the board of directors who do not have any voting rights. They have a right to attend the meeting. Very important, friends, please note it down. Do the suspended board have a right to attend the meeting? The answer is yes. As per section 25, they have a right to receive the notice and attend the meeting, but they will not have any voting rights. Operational creditors or their representative, the amount of their aggregate dues is not less than 10% of the debt, but no voting right. So that means if there is an operational creditor and if their debt due is more than 10% of the total debt, then they have a right to receive the meeting agenda and attend the meeting. So remember, the exam question could be, who are invited to the COC meeting in spite of not being a member of the COC? In spite of not being a member of the COC. Right? The absence of any director, partner of the OC shall not invalidate the proceedings of such meeting. Any creditor who is a member of the COC may appoint an IP other than RP to represent such creditor in the COC meeting. Remember, so any creditor who is a member of the COC may appoint an IP other than the RP to represent such creditor in the COC. Provided the fees payable to such IP represented individual will be borne by the such creditor, not a problem. Then voting share will be assigned to each creditor based on the financial debt that we have understood. And the meetings will be conducted as per the regulation. So there are guidelines given for the meeting, how the meeting will be conducted, roll call will be done, how attendance will be counted, and therefore how many days of notice is to be given for the meeting and so on. So how many meetings are to be conducted? As in company law, there are requirement of having a meeting every quarter and so on. So RP may convene a meeting as and when he considers necessary. Or if a request is made by the members of the committee representing 33% of the voting rights. So in both the cases, he may call the meeting. One on his own, other on the request of the COC member having 33% voting right. And the meeting will be called by giving not less than 5 days notice in writing to every participant. Provided the committee may reduce the time period to 24 hours and not less than 48 hours if there is any authorized representative. So time limit may be reduced to 24 hours and 48 hours if there is any authorized representative. So that is all about the authorized representative, the constitution of COC, and the meeting of the COC. Now, the power of the COC. What are the powers of the COC, friends? All decisions of the COC shall be taken of vote not less than 66% of the voting share of FC, or by majority or by 90%. I have discussed this. 90% in case of withdrawal, 66% in case of change of RP or approval of resolution plan, which we'll see later on. And otherwise, mostly it is 51%. The CSC has got the right to require the RP to furnish any financial information, and the RP shall make available any financial information within a period of 7 days of such requisition. Now, there are certain matters which will require a prior approval of COC. Prior approval of COC. So what are those matters? Prior approval. Five days, and then later on, if he gets the approval, then 24 hours and 48 hours if there is a AR authorized representative. Mr. Sumit. Mr. Sumit, is it clear? Prior approval of COC. During the CRP process, you are running a business because you are running a company. The bank will obviously not give you loan because there is already a default. So let's say if you want to raise funds to run the company as a going concern, then you require a prior approval of the COC. If you want to create any security interest over the assets of the corporate debtor, then you require a prior approval of COC. If you want to change the capital structure of the corporate debtor, including by issue of further shares, because financial creditors are only part of the COC, but if their operational creditors are part of the COC, then they can also send their authorized representative. That is given in regulation, not under the section. Further, if you want to record any change in the ownership interest of the corporate debtor, give instructions to financial institution maintaining accounts of the corporate debtor for a debit transaction from any such account in excess of the amount decided by the committee of creditors in their meeting. So if any debit is being to be done to any account which is being maintained by the financial institution, then prior permission. Any related party transaction requires a prior permission. Delegates his authority to any person, then require prior permission. Make any change in the management of the CD or his subsidiary, prior permission. Dispose of any shares of any shareholder of the corporate debtor or their nominees to third parties, prior permission. Now, there is a difficult job, If a shareholder transfers his shares to anybody, how can I restrict? Very difficult for me to restrict, In case if it is a listed company, if he's selling the shares in the open market as a IRP, how can I restrict that particular transaction? Anyway, so these are make any change in the management of the CD, transfer rights of financial debts or operational debts under material contract other than in ordinary course of business. If there is any material contract with your financial creditors or operational debt creditors, and if I want to make changes or transfer the rights in this, Other than in the normal course of business, you are not allowed. Or if you want to make any changes in the terms of contract of what statutory auditors, internal auditors, then you are not allowed. So my question, who constitutes the COC? So obviously we have seen who constitutes, not who are part of the COC. So IRP is the answer. Which of the following action does not require prior approval of the committee of creditors? Prior approval of the committee, which does not require any prior approval. Appoint any legal, accountant, other professionals of the corporate debtor? Yes. Rest, everything requires prior approval. Create any security interest, record any change, make any change in the management of the CD. I hope it is clear till now. Any confusion, any doubts, please ask. Now remember, once the RP is appointed, what is the role of RP? Primarily, the major role of RP is he has to take over all the assets from the IRP, because this job will shift from IRP to RP now. And RP, if it's Mr. Devgan, the new person, then he has to take all the control. And thereafter, he will be representing with all the third parties, rights and benefits of the corporate debtor in judicial, quasi-judicial, or arbitration proceedings. He has the right to, present himself. He can raise interim finance subject to approval of COC. We have seen that. And he can appoint legal, accountants, other professionals in the manner as specified by IBBI. He will maintain an updated list of claims. Fine. He will convene all meetings of the COC. Fine. Now, from here, the job is something different. Till now, it is common. But from here, the job is different. And the job is he will prepare the information memorandum. He'll invite prospective resolution applicant to submit to the RP the plans, and the plans will be presented to the COC, and then file application for avoidance of transaction. These three are important things, which is different from the IRP, because IRP will also do the same thing. Everything except for raising interim finance, maybe not, but if required, he can do so with the approval of the COC. But prima facie, the first 4 job remains same. So what is information memorandum? What is prospective resolution applicant? That is the major job. And what are avoidance of transaction application transactions? That is important, friends. So let us understand now the job of RP. Once the RP gets appointed, obviously apart from conducting COC and claim review, he has to publish a Form G by 75th day. 75th day from which date? From the date of commencement, remember. From the date of commencement of the CIRP process, a Form G. Now, what is a Form G? Form G is defined in the annexure. It's a paper ad which is given where you will invite people to buy out this company by submitting a particular plan in the prescribed way as per the law. So when you want to invite, you have to publish a form, that is Form G, which is nothing but inviting expression of interest from whom? From prospective resolution applicant, PRA, from prospective resolution applicant. So they will be termed as PRA, Prospective Resolution Applicant. So the Form G is an ad inviting expression of interest. That means I show my interest. Obviously, that PRA has to fulfill the conditions of the EOI. And based on the information published in Form G, that by what date he has to give his expression of interest, and if he fulfills the condition and he becomes an approved PRA, who will do that approval of PRA? The RP. So RP will issue Form G by 75th day. In that, he will mention that anybody who wants to be interested, who is interested, will submit his EOI by next 15 days. And after somebody submits that EOI, thereafter, within next 10 days, 15 days, the RP will submit or provide the list of approved PRAs who are fulfilling the conditions of EOI. And once they become the approved PRA, then they can submit their resolution plan based on RFRP, IM, and EVM. Now, what are these RFRP, IM, and EVM? So that we are going to cover after this short break. What is IM, what is RFRP, and what is EVM? So see you after this short break. submission of plans. So as I said, the job of RP, primarily the major job is to publish Form G, invite expression of interest. And whoever shows the interest, thereafter, he will be asked to submit a plan. A resolution plan, that is known as a resolution plan. Remember this word resolution plan, which is a very important document, which will give the details of how the new buyer, technically the prospective resolution applicant. Simple words, he is the new buyer of the company. So there may be 2, 3, 4, 5, whoever shows interest. They will submit a plan that how much amount they are going to offer to settle the claims of all those people who have submitted their claim, and they are part of the COC, plus the operational creditors and so on. So prima facie, the plan will cover an amount which is to be paid to all the creditors, and plus how they are going to take over this company and how they are going to operate this company. So these are the three primary major issues which are covered in the resolution plan. Obviously, there are other items also, but three material things: the amount to be paid to the creditors. Second, how they are going to take over this company. That means they will pay the amount in 30 days, 60 days, and then they are going to take over by issuing of shares, new shares, bringing in new people who are going to the board, and then how they are going to run this company, whether they are going to add a capacity or whether they are going to run their existing capacity, whether they want to shift this particular plant to somewhere else, how they are going to run this company. And obviously, this plan is prepared by professionals like us who have an understanding of the law, so compliant with the law. There are rules which have been trained for the contents of the resolution plan. That plan should contain these items. Thereafter, it will be considered as a compliant resolution plan. So obviously, how will the PRA come to know about what is required? So they will be sent a document request for resolution plan and EVM. Request for resolution plan and EVM. Request for resolution plan will contain the contents of the RFRP document, the contents of the plan, how they are going to submit their plan, if there is an amount which is required to be submitted with the plan or on the approval of the plan. All these things will be mentioned in the RFRP document. And EVM is a document or a matrix which is being submitted to evaluate the overall plan and give marks, so that people will come to know, whoever have to decide on the approval of the plan, that how do I approve that plan? So based on EVM, that is one document, not necessarily the only document which is to be considered. One document, the basis on which we can decide which plan was better suited to us. So these are certain document things. In exam, probably I don't expect questions based on RFRP, EVM. These are all technical matters. And plus the IM document, the information memorandum, I forgot. So what is an information memorandum, friends? As an prospective resolution applicant, again in simple words, buyer, as a buyer, how do I come to know about the company? Unless I have some information. So the RP will prepare this information, which will contain certain kind of basic information about the company. Basic information. That basic information is the, one second, I'll just go to that particular slide where I am, the contents of I am are there. Okay. No, it is not here in this particular presentation. Anyway, so as per regulation, the basic information is all about assets and liabilities. The IM will contain the details of the assets and the liabilities of the company, along with contingent liability, if any. Along with contingent liability, if any. So this document gives a first-hand information to the resolution applicant that the company is into this business, the assets, the location of the assets, these are the liabilities, and these are the owners, the shareholding pattern, and the contingent liability. So based on that, you will show their expression of interest, and thereafter they will prepare the resolution plan. Now, based on IM, they will prepare the resolution plan? No. So once they become an approved prospective resolution applicant, they will have access to the information, further information provided by the RP, and based on that IM and further information, they will submit the resolution plan. So resolution plan is a plan proposed by resolution applicant for the insolvency resolution of the corporate debt as a going concern. That is the prime facie, that I will continue run the business as a going concern. And this plan may include provision for restructuring of the corporate debt, including by way of merger, amalgamation, demerger, whatever you want to do as a prospective resolution applicant, as a buyer, whatever you want to do with that company, please mention that in your plan. But the objective should be that the company should remain as a going concern. That is the prima facie objective. Any questions? So one question is purely based on what is IM, a simple document. Then what is resolution plan? That is again a document. As per definition, you cannot go into the contents of the resolution plan or the details of the resolution plan. So the job of RP is very clear, friends. I'll go to the job. One second. Let me look into the. So the job, as I discussed out here, prepare the information memorandum, invite PRA, and present all resolution plan to COC for their approval. So till now, we have seen this. One more duty is to file an application for avoidance of transaction. I'll come to this point later on also. What is this avoidance transaction? We'll see later on. So friends, the resolution plan will be submitted to whom? Obviously to the RP. The RP, submission of resolution plan to RP by resolution applicant, along with an affidavit under section 29A. Very important. Along with an affidavit under section 29A. What does 29A says that? 29A is very important. A restrictive provisions on who is eligible to submit a resolution plan. Very important. It's a restrictive provision mentioning that who all cannot submit a resolution plan. Who all cannot submit a resolution plan. So as per this section, the following people are not eligible to submit a resolution plan. Remember, not eligible. The first, any person acting jointly or in concert with such person is an undischarged insolvent. That means individually he has been declared as insolvent as per the provisions of the code, and he's not been discharged. Discharged in the sense his process is not over and therefore is not eligible. That is the first. The second, he is a willful defaulter as per the RBI guidelines. Willful defaulter as per the RBI guidelines. Fine, we understand that. Third, at the time of submission of our resolution plan, an account or account of the corporate debtor under the management or control of such person, of whom such person is a promoter classified as non-performing asset, and at least period of 1 year has lapsed from the date of such classification till the date of commencement of the CRP process of the corporate debtor. That means if you as a buyer are proposing to buy out that particular corporate debtor, then you should not have any account with any bank which is classified as an NPA, which has been classified as NPA prior to 1 year. In that case, you are not eligible. The objective is that only solvent person should come and buy out this company. Otherwise, you are buying an insolvent company, handing over to a person who is insolvent, then again that company will fall under insolvency. So that is not the prime objective of the law. Or he has been convicted for any offense punishable with imprisonment. Fine. For 2 years or more under any act, or for 7 years or more under any law. Or he has disqualified to act as a director. Or he has been prohibited by SEBI from trading in securities or accessing the security market. Or has been a promoter and management of control of a corporate debtor in which a preferential, undervalued, extortionate or fraudulent transaction has taken place. We'll understand this again. Please note it down. We'll understand this term later on. This is in relation to what I said again earlier as duties of RP. As I said, I will take this point later on. Or has executed a guarantee in favor of creditor in respect of a corporate debtor against which an application for insolvency has been made by such creditor has been admitted, and such guarantee has been invoked by the creditor and remains unpaid in full or part. That means if I'm a personal guarantor for a company and that company has been admitted in insolvency, or is subject to any disability from clauses A to G under any law in a jurisdiction outside India, or as a connected person not eligible under clause A to I. So you yourself and a connected person. Now that connected person has not been defined very clearly, but we can obviously draw inferences from other act of what is a connected person. So the whole objective of putting this restriction is, friends, that we should not allow a person who is not capable to run this company as a going concern, or whose track record proves that he is not the right kind of person, especially in terms of finances and moral character. Two primary things. So he will submit a resolution plan along with the affidavit that I am eligible, I am not disqualified under 29A. The plan will be examined by the RP. Therefore, the plan will be presented to the RP, to the COC for approval. Approval of COC by vote not less than 66%. And the plan which is approved will be submitted to the adjudicating authority. During the approval part, or before that also, the resolution applicant may attend the meeting of creditors. Obviously, he will not have voting rights. So practically, let me tell you, friends, this whole process takes time. Though the step is very clear, he will examine, he will submit the plan for approval, then approval by COC. It will not happen in one meeting. There will be multiple meetings which will be held because there may be a round of negotiation. So it's not that whatever plan has been submitted is final. The PRA may be given an option of changing the resolution plan. The negotiation will be done, and there could be multiple revisions of the plan. Multiple revisions of the plan. So when it is said that the plan will be examined by the RP, so obviously the RP has to ensure that it complies with the law. Which section? Section 30. Section 30 talks about the compliance of the law in resolution plan. And what does the section 30 says that? It says that the plan should provide for payment of all the insolvency resolution process costs. This is important again. Not in terms of exam, not primarily, but yes, as general, we should be aware. So what is insolvency resolution process cost, friends? So this is a cost which is incurred by the IRP and the RP from the date of commencement of the CIRP till the plan is approved. For example, the fees of the RP, any appointment done by RP, the expense, let's say accountant, legal professional, that is part of the CIRP cost. Any advertisement which is given by newspaper, that is part of the CIRP cost. Any traveling expenses incurred, that could be part of the CIRP cost. Fees of authorized representative, that can be considered as part of CIRP cost. Along with that, any expenditure which is ensured to maintain the company as a going concern, security guard, insurance, and any other item, anything which is paid during this process is to be considered as CIRP cost. So the plan should mention that whatever cost has been incurred for running the company as a going concern, I am willing to pay that cost. I am willing to pay that cost. It should be specially mentioned in the plan. Then it should provide for payment of debts to operational creditor and that payment shall not be less than to the amount to be paid to such creditors in the event of liquidation under section 53. Now, this is a very important provision which talks about that I will pay the amount to operational creditors. Practically telling you, out of 100 cases, 95% of the cases do not provide for payment to any creditor. Though the law says that they should provide a payment for the creditors, but only to the extent of that amount which they will be eligible if the company goes into liquidation. And the amount is distributed as per section 53, which we'll discuss later on. 53, in that case, it talks about the waterfall mechanism of making the payment to all these stakeholders, and the operational creditors come at a very later stage. So if you go by that particular section, probably whatever amount is proposed by the resolution applicant, if I start distributing it, probably the amount will get exhausted only at the first and the second level. And their number will come at, let's say, 5th or 6th or 7th number. So obviously, under the waterfall mechanism, because they are not getting anything, so in the resolution plan also, the resolution applicant will mention, yes, I'm willing to pay if any amount is due as per the law. But practically, the amount is 0. But at least they should provide for it. Then it provides for payment of debts of financial creditor who do not vote in favor of the resolution plan. and that payment shall not be less than the amount to be paid to such creditors according to section 53(7) in the event of liquidation. So again, it should provide for payment of debts to this financial creditor, and that amount should not be less than the amount to be paid to such creditors as per the waterfall mechanism. So whatever they are receiving as per 53, they will be eligible for making the payment, for receiving that payment. And that should be provided in the resolution plan. So though it looks complicated, but when we take numbers and do the calculation part, it will be very clear. It is clarified that distribution in accordance with provision of clause B of section 30 shall be fair and equitable. Right? Not a problem. Further, the plan should also include how that management of affairs of the corporate debtor will take place after approval of the resolution plan. Very important. It should provide for that. Implementation and supervision of the resolution plan. That means how that plan, let's say the plan mentions that the amount will be paid in 3 months, 6 months. What is going to happen in that 6 months? Who is going to be there? So they should provide for implementation and supervision of the resolution plan. So maybe they'll appoint a few people who are going to supervise this process. Then it should give a declaration that it does not contravene any provisions of the law. And wherever an approval of shareholder is required under Companies Act, by virtue of this section, it is deemed to be given. Let's say, for example, SR is required for implementation certain action mentioned in the plan, it is deemed to be given. So these are the contents of the resolution plan, friends. This should be part of the resolution plan, and then thereafter only it will be taken as a legal compliant resolution plan, and then it will be presented to the COC for the approval. Once it is approved, it will be given to the adjudicating authority for its approval. So adjudicating authority is satisfied that the resolution plan is approved by the committee, meets the requirements specified in section 32, whatever we have seen, and it shall by order approve the resolution plan and shall be binding on. This is important from exam point of view. If the plan is approved, what is the impact of the plan? It shall be binding on the corporate debtor, its employees, members, creditors, including central government, state government, local authority, to whom a debt in respect of the payment of dues arising under the law for this is being enforced, such as authorities to whom statute dues are owed, guarantors, other stakeholders involved in the resolution plan. Before passing the order for approval, it will satisfy that the RP plan has provision for its effective implementation. It has provided for that monitoring committee who is going to supervise. And if it feels that the plan is not in conformity of the law, it may by an order reject the resolution plan. Once the plan is approved, moratorium will cease to have effect. Remember, moratorium will cease to have effect. And wherever required, all the approvals will be taken within a period of 1 year from the date of approval of the resolution plan. So this is with respect to approval of resolution plan, the contents of the resolution plan, and the process of the filing of the resolution plan with the RP, and thereafter RP taking it further. So yes, Mr. Smith, if the case is in arbitration in foreign court, then it will be binding on that. Yes, it is mentioned that all arbitration proceedings will be kept in abeyance. It is not mentioned that whether arbitration should be in India. So any arbitration court case pending any elsewhere also will be falling under moratorium. Or if the plan says that, because in arbitration is a contingent liability, and if the plan says about it, obviously nobody can question that, even though it is in a foreign court. These are very big issues, Mr. Sumit. You have raised a very valid point, but then these are big issues which at times, lead to all the delays in the process of completion of the CRP. If anybody feels aggrieved by an order of the adjudicating authority approving the resolution plan, they may file an appeal at NCLAT under section 61. Okay, so what is the resolution plan? A plan proposed by FCOC? No. Plan proposed by A? No. A plan proposed by any person for resolution of the corporate debtor as a going concern? C. Who approves the resolution plan? COC. What is the voting requirement? Very simple, 66%. So this completes our whole process of CIRP process, friends. From the CIRP, we move on to the process of liquidation. From CIRP, moving on to the process of liquidation. Again, liquidation is a very big process where we have to understand a lot of other things. So we'll complete this process today itself. We'll try to do that. Now, when will liquidation happen? Exam question. Exam question, when will liquidation happen? Where before the expiry of CRP process or the maximum period permitted for completion of the CRP, the A does not receive a resolution plan. That means the process is that the adjudicating authority on its own. So obviously on its own means what? The RP will apply, saying that it has not received a resolution plan, the maximum period is over, and COC has not given the permission of any plan or liquidation. Therefore, I propose this company towards insolvency. So that is one scenario where nothing has happened during this 270 days. Nobody is interested. Time period is over 330 days, and I'm filing this application. Or where the RP before the confirmation of a plan or thereafter also, whatever the scenario, intimates the A about the decision of committee of creditors approved by not less than 66% of the voting share. Again, to take the company into liquidation, we require 66% voting. Or where the plan has been approved by AA and is contravened by the concerned corporate debtor, any person other than corporate debtor, whose interests are prejudicially affected by such controversy, may make an application for liquidation. So the plan has been approved, but later on, the corporate debtor does not comply with this provision of the plan. And thereafter, any person who has been aggrieved, let's say, if I have to receive an amount as a lender, as a financial creditor, and the company which has proposed to take over, they have not paid that amount, because they have not complied with the law, then I, as in financial creditor, can go to the NCLT and say that because the law has not been complied with, so let us take the company into liquidation now. Now the question comes in, friends. What could be an ideal time for taking the company into liquidation? Ideally, Form G should be published inviting people to submit a plan, and thereafter they will wait for the time period. And when nobody comes in to submit a plan, or let's say, can the dates be extended from 180 to beyond that 180, 90 days? Yes, we remember yesterday, we can extend the period to 90 days more, that is 270. So even within those 270 days after publishing another Form G, so we go ahead and file another Form G and ask the people to submit their resolution plan, but nobody comes in. And thereafter, we can take the company towards liquidation. And that is an ideal scenario where even after giving invitation once, twice, we may, file an application for liquidation. But let's say an ideal situation, friends, where the company does not have any assets. It's a trading company, no assets. It was trading, but the operations are closed for 2-3 years. And no business is being done. No assets are there. Would you think that there would be an interested people who would try to buy out this company? The answer is no. There may not be any people who would be interested in buying out this company. So under that scenario, the COC is constituted within 30 days. And let's say after 15 days, it decides that we don't need to publish any Form G for inviting people to submit their plan because they think that company does not have any asset and they would not find any buyer. So ideally, we should submit or take the company into liquidation. So liquidation can be approved by the COC anytime of its formation, anytime after it is formed. Ideally, I've given you this scenario, but they can take any decision and liquidate the company. So these are the 4 things. Section 33, which talks about when will liquidation happen. Now, what is the impact of the order? The impact is very clear. Moratorium will apply again. And no suit can be instituted by liquidator without the approval of A. Notice of discharge to employees. Very important, friends. The impact is that all employees need to leave now. All employees need to leave now. Until and unless the business is continued by the liquidator. This is important. Until and unless the business is continued by the liquidator. And the second, all assets to be transferred to liquidation state. Now, what is liquidation state? It is nothing but a statement or a record which will mention that these are the assets which the company is having. List of assets the company is having. List of assets the company is having. That is the meaning of liquidation state. Now, who will be appointed as liquidator? Very important. Who will be appointed as liquidator? Very important. First, RP will continue as liquidator. subject to his written consent and approval by the COC. So the RP may continue to be the liquidator subject to the written consent given by the RP. Normally, practically telling, let me tell you, how do I become an RP? I have to give my consent. So I will give it in writing. That form is known as Form AA. I will send that form that yes, I am willing to act as a liquidator by submitting certain kind of information. So that written consent will be there with the COC, and based on that, the RP will be appointed as liquidator by the COC. Or the RP will be replaced by another person as a liquidator. Provided you as an RP, let's say I have not given my consent, I am not interested, I don't want to be the liquidator, then obviously the court will appoint someone else, or the COC will propose another name. So when, exam question, when can RP not be appointed as the liquidator? When can RP not be appointed as a liquidator? So when he does not give us a written consent, or where the COC recommends another name. And a third scenario, which is very important, friends, where a resolution plan which has been approved by the COC, but rejected by the adjudicating authority. Rejected by the adjudicating authority, then under that scenario, the RP cannot be appointed as liquidator. The RP cannot be appointed as liquidator. I hope it is clear. So this is an exam question. When can RP not be appointed as a liquidator? Then once the liquidator is appointed, again, the powers of the board will get suspended. KMP and all the partners shall cease to have an effect and shall be vested. All the rights will be listed on the liquidator. So this is general. The powers and duties of the liquidator. So we need to compare the powers and the duties of what? IRP, RP, and liquidator. There are three people now. IRP, RP, and liquidator. I hope it is clear to you. IRP, RP, and liquidator. So what are the powers of liquidator? The powers are very clear. To verify all the claims of the creditors. Now again, how this claim has come into picture. So practically as per the liquidation rules, the liquidator has to give a public announcement again. Same way as the IRP had given a public announcement inviting all the claimants to file their claim, the same way the liquidator will make a public announcement asking people to submit their claim. Within a particular time period. So therefore, he has to verify all the claims. He has to take over all the assets, property, effects, and actionable claims of the corporate debtor into his custody. To evaluate the assets and property of the corporate debtor. To take necessary measure to protect the assets of the corporate debtor. To carry on the business of the corporate debtor for its beneficial liquidation. So very general powers. I think logically it looks, yes, he has to follow such steps. Then he has got the power to sell the immovable property as well as actionable claims of the corporate debtor by public auction or by private contract. However, such sale shall not be made to any person who is not eligible to be resolution applicant. So they should be, qualified, not disqualified as per section 29A. And then to draw, accept, endorse any negotiable instrument, to take out his official name, letter of administration to any disease or contributory, to do is in his official name, any other act or so on, and to appoint any person for his assistant. So very general points, nothing very technical to be understood. But important thing again, investigate the financial affairs of the corporate debt to determine undervalued or preferential transaction. Again, this word is coming, undervalued or preferential transaction. Again, recall I had mentioned it earlier also, duties of RP, avoidance of transaction. Then 29A talks about ineligible person, where the corporate debtor has been identified with certain kind of transactions which are in the nature of undervalued preferential. Time and again, these transactions are coming into picture. So what are these transactions? Before going to liquidation state, distribution part, let us understand the type of transactions out here. So because it has been referred in various sections, section 25, section 29A, and then the powers of the liquidator. Now, you may wonder, friends, that why will the company go into insolvency? Obviously, there are certain kind of financial issues, operational issues, a lot of issues come up, and therefore maybe the company is not able to pay the debt. Remember, it goes into insolvency because there's a default. So default may happen because of various reasons. So to understand in the past, whatever has happened in the company, we need to do some analysis, investigation of all those transactions which the company has done. Let's say in the last 1 year, 2 years, or even going beyond that. If you feel that, yes, we need to go beyond that. And when you review the transactions, you come to know that there are transactions which are preferential in nature. There are transactions which are preferential in nature. Now, preferential in nature means that there is a transfer of property or an interest thereof of the corporate debtor for the benefit of a creditor or a surety or a guarantor for an account of an antecedent financial debt or operational debt or other liabilities owned by the corporate debtor. So, when you transfer a property, of the corporate debtor for the benefit of the creditor or a surety or the guarantor for an account of any financial debt. So let's say there's a loan provided by a company, by a lender, and you transfer one of the properties to that lender, or somebody has given a guarantee on your behalf, you transfer a property to that guarantor. That may lead to a preferential transaction. Second, beneficial position. The transfer under clause A has the effect of putting such creditor or a surety in a beneficial position than it would have been in the event of distribution of assets being made in accordance with section 53. So you have transferred a property. Let's say you have given us, a company has given a loan to you. So there are two people who have gone on loan. and you transfer a property where a particular lender from an unsecured loan becomes a secured loan. And in the event of section 53, the waterfall mechanism talks about priority payment to secured lender in comparison to the unsecured lender. Or let's say you convert an operational creditor into a financial creditor. So any transfer which has the effect of putting such creditor in a beneficial position, or transfer of property or an interest thereof of the corporate debtor on account of any financial debt or operational debt. So you transfer a property, or that transfer has the effect of putting such creditor in a better position. Both the situation, those transactions will be referred to as a preferential transaction. Both the transaction will be referred to as a preferential transaction. Exception when the transfer is made in the ordinary course of business or financial affairs of the corporate debtor. So when it is an ordinary course of business, obviously it was required for running the business. We should not do it. Any transfer creating a security interest in property acquired by the corporate debtor to the extent that such a security interest secures new value and was given at the time or after the signing of security agreement that contains a description of such property as security interest and was used by the corporate debtor to acquire such property. So you have given a security interest, and security interest means you have created a charge on that asset, hypothecation, and there's an agreement which mentions the description of such property, and the amount which was raised through that security interest has been used by the corporate debtor to acquire such property. So these are certain exceptions which are very normal. So anything which is done in a normal course of business cannot be treated as a preferential transaction. Undervalued transaction. Such transaction has not taken place in the ordinary course of business of the corporate debtor, where Mr. Sumit, there are no liquidation provision as per Companies Act. There is no such condition of liquidation under Companies Act. Companies Act covers only winding up. So whatever we are studying today is as per IBC. Winding up provisions are different. Liquidation provisions under IBC are different. Mr. Bhaumik, liquidation state prima facie will contain all those assets which are mentioned in information memorandum, no doubt about it. But then there's a separate document which you have to create, and we'll say that everything will fall under liquidation state. We'll come to that. We'll study liquidation state later on. Let me first cover all these PUFE transactions. So undervalued transactions are those transactions which is not taken place in the ordinary course of business, like giving a gift to a person, enters into a transaction with a person which involves the transfer of one or more assets by the corporate debtor for a consideration, the value of which is significantly less than the value of consideration provided by the CD. So anything which is done at a lower price, the concession is lower, but which is not in the ordinary course of business, remember. Suppose if I want to sell the asset because I have to pay the debt loan, so even if I have to sell it at a discount, I will sell it because I have to pay the loan. That's an ordinary course of business. But generally, I'm giving a discount unnecessarily without any reason, then that may be considered as an undervalued transaction. Now that undervalued transaction, till how much time period I need to look at that particular transaction? If that transaction is with a related party, I need to go back to 2 years. And if it is with an unrelated party, I will look into 1 year. Last 1 year. So this time period is relevant from exam point of view, MCQ question. Preferential undervalued transactions to be looked into last 2 years if it is with the related party, 1 year if it is with the unrelated party. What is the definition of undervalued? That has to be learned. What is the definition of preferential? That has to be learned. Now, who will make for this application? What is going to happen? See, if you, as a RP, you need to identify these transactions. Now, as a RP, how am I going to? Obviously, you will go through the books of accounts, do all the verifications, find out those transactions which are of these nature, and then prepare a report. And based on that report, file an application to the NCLT. Now, do you think that you have got so much of time to do these all kind of more of an investigation? So, for your support, you can appoint a forensic auditor. You can appoint a forensic auditor. And based on the forensic auditor report to further provide support to your findings, you will file an application at adjudicating authority. And based on the application, an order will be given by the adjudicating authority under section 44 and 48. So an RP or the liquidator, whoever finds out that particular transaction, he will make an application. And based on the application, what is the A going to give then the order? If it is proven that the transactions are undervalued, and the liquidator or the RP having sufficient information to avail such a transaction did not report such transaction, this is under 48. Then it shall pass an order as under restoring the position as it existed before such transaction and reversing the effects thereof in the manner laid down in section 45 and 48. So that means the original state will come into existence, reversing the effects, and requiring the IBBI to initiate disciplinary proceedings against the liquidator or the RP as the case may be. So if the application is not filed by the RP or by someone else, like application by the creditor under section 47. So if the creditor comes off the opinion and he files an application, then it shall pass an order restoring the position and requiring the IBBI to initiate disciplinary proceedings against the liquidator. So prima facie, the exam question will be, what is the effect of the application filed under for preferential or undervalued? The original transaction will be restored. And if there is an amount involvement, that amount will be called for. That is preferential or undervalued transaction, friends. And then there is one more fraudulent, that is under section 66. So if there is any fraud committed by the officers and the corporate debtor, then as per section 66, an application can be filed by the RP for these fraudulent transactions, and the NCLT can decide on the same, that what has to be done with those fraudulent transactions. Now, for those fraudulent transactions, the time period is unlimited. That means you can go back and refer to any time period. Fraudulent transactions, diversion of funds, siphoning of funds, carrying on the business for fraudulent purpose. These are all examples of fraudulent transactions. So, because it was being referred to in various sections, so I had covered this PUFE transaction, which talks about transactions of peculiar nature, giving preference, undervalued, extortionate transactions. Then they will be referred to adjudicating authority, and the NCLT will give an order if these transactions are found to be wrong to restore the original position. So coming finally to the liquidation state. Liquidation state. Extortionate means, Sumit, let's say you are entering into transactions with a particular buyer, seller at an abnormally very high rate of interest. No, buyer, seller, sorry, lender with a high rate of interest. You are taking a loan at 36% rate of interest. Or you have given a loan at 1% rate of interest. Now, this could be an extortionate transaction. Extortionate credit transactions. So some transactions which are not preferential, neither overvalued, undervalued, but having certain characteristics which are abnormal in nature. Those are referred to as extortionate transactions. Am I clear, Sumit? So what is liquidation state? So liquidation state is basically nothing but compilation of all the assets of the company and bringing it in under one pool. Now, one pool does not mean that I will bring all those assets and make it, stored in a particular storage house. No, nothing like that. So on paper, it will be like this, but practically it will not be like this. So I need to know as a liquidator, what are those assets which the company is having so that I can dispose of those assets. That is the purpose. So I can dispose of the assets. So liquidation state is the list of assets over which the corporate debtor has ownership rights, including shares held in subsidiary. Any assets subject to determination of ownership by the court of authority. Any assets that may not be in the possession of the corporate debtor, but not limited to encumbered assets. Encumbered assets, which are again given as a security charge, that is the encumbered assets that has got certain encumbrance, certain obligations attached to that. Assets of the corporate debtor in respect of which a secured creditors has relinquished security interest. We know we create charge over the assets. That means those assets are given as security to the lender. Now, the lender says that, okay, I am relinquishing my security interests. That means you can now satisfy the charge. I'm not interested in that asset. You can keep that asset. So wherever he has relinquished that security interest, that asset will come under liquidation state. Or their value recovered through proceedings of avoidance of transaction. Now, this is important again, because that is why I discussed those avoidance transactions. All preferential undervalued transactions are avoidance of transactions. Avoidance means those transactions could have been avoided. Those transactions could have been avoided. So if any amount has been recovered by the order of court because of those avoidance of transactions, that amount or that asset will now come under liquidation state. Tangible assets, intangible assets, any other property belonging to or vested in the corporated at the insolvency commencement date. All proceeds of liquidation, whenever I sell the asset, whatever amount will come, realize be part of the liquidation state. Now, which are not part of the liquidation state assets, friends? Assets owned by a third party which are in possession of the corporate debtor, including assets held in trust for any third party, bailment contracts, or sum due to any workman employed from the provident fund, pension fund, and the gratuity fund. Contractual arrangement which do not stipulate transfer of title but only use of assets, like an asset which is held by you but says that you cannot transfer this asset. You can use the asset, but you cannot transfer these assets. Such other assets as may be notified by the central government in consultation with any financial sector regulator. So these all will constitute my liquidation state. Again, an exam question, direct question, no technical question will be asked, except to a situation where assets are held by a third party and then it says that it is part of the liquidation state, then you can always mention, no, this is not allowed. Then assets in security collateral held by financial service provider and subject to netting and setting off in multilateral trading or clearing transactions. Let's say assets as held as collateral in a demat account. I have given my shares in the demat account and they are pledged to the stock exchange. So if the stock exchange has to recover any amount from you because you have to pay a certain amount to the stock exchange and your shares are lying on demat and you have pledged those shares, then those assets will not come under your liquidation state. They will come under only after netting off, after clearing all your dues. Personal assets of the shareholder, obviously, that cannot come. Assets of any Indian or foreign subsidiary, that will not come. That is very natural. So the basic purpose is to create a pool of such assets where I come to know that I have to dispose of these assets, realize the amount and distribute to the shareholders. So certain kind of practical inputs, friends, in terms of claims, when the public ad will be given, all the claims have to be submitted to the liquidator. Based on the claims within a period of 30 days, within 30 days, the claims will be received. And based on the claims, the liquidator will form a SCC. It is given in liquidation rules. It is not somewhere given in the act. While for committee of creditors, it is given in the act. Remember, act mentions formation of committee of creditors, but here act does not mention formation of SCC, but it is covered in the liquidation rules. Stakeholder consultation committee. Stakeholder consultation committee. So the job of stakeholder consultation committee is same as the COC. With the recent changes which has happened in 2 months before, previously stakeholder consultation committee only had advisory role, that they can advise the liquidator, which is may not be binding on the liquidator, which may not be binding on the liquidator. So liquidator had more power, control, and he could do anything which he wanted. But in the new changed version, anything which is done by the liquidator has to get an approval of the SCC. So whenever approval is required, obviously that means SCC has got more power. So a stakeholder consultation committee is formed, same as COC, with a different version. different version in the sense, for example, if there are two unsecured financial creditors, for example, in COC, both will come as a part of the COC. But in SCC, out of two, only one will come. Out of two, only one will come. Financial creditors may be represented by one person. So, SCC is coming more in a refined version with certain restrictions. There are no specific transactions which are given where approval of SCC is required. So to execute the process of liquidation for monitoring an SCC is formed. So for all transactions done by the liquidator, probably he approaches the SCC and gets the approval. That is practically what happens. SCC is constituted from all the claimants. It's not only about financial creditors, remember. It will include financial creditors, unsecured financial creditors, operational creditors, representative from the government dues, employees, government dues. So everybody will be part of this SCC. So that is the changed version in the liquidation part. Liquidation has to be covered in a period of 1 year. I think that was mentioned somewhere. I forgot to discuss it. Liquidation has to be completed from 1 year, within 1 year from the date of liquidation order. So this was all about liquidation for today. Obviously, there are some parts which are left. Bailment contract. See, bailment contract is a type of transaction where goods will be delivered by one person within a contract for a purpose. And after that purpose is over, it will be returned back. So it may be example for job work basis. So that's a bailment contract. So I give you certain goods for some purpose, and once that purpose is over, you have to return back those goods. So that is an example of a bailment contract similar to job work. I hope it is clear, Sumit. Vomik, I had given the examples of SCC, who will form the SCC. So friends, I have uploaded the presentation on the portal also. You can go through the presentation, read it, and day after tomorrow, I'm going to cover the concluding part, the balance part of liquidation. Then I will cover the amendment part, the new sections which have been introduced, and I'll cover a few case-based scenarios. Right, friends? So thank you for coming out today and attending today's lecture. Hope to see you soon with more questions from your end. By the time, please study and come with your thought-provoking questions. Thank you.